Hello traders, Gary Wagner here, approximately 11:30 in Honolulu, 5:30 in New York City. It is Thursday, the 16th day of August, 2012, and this is the daily report for gold and silver. Nice, strong, higher showing in the precious metals markets pretty much across the board. Currently, we do have a $12 move in gold. As you can see, 1613.47, low 1610 cents, and the high 1621 on the day. Also, a very nice showing in silver today, up about 1.4% on the day. 27.64 is the low, 28.41 is the high. We are closed near the highs of the day at 28.16. Traders, as you can see, we are going back towards the mid-range of this tight consolidated trading range that we have seen gold in. Let me go ahead and blow that up for us. And you see that I have these Henkin candles really overlapping. And the reason for that is so that we can really get an idea of the range of this marketplace itself in terms of the highs and the lows. I do that by taking a look at where these bodies kind of intersect. You can see that we have really solid support at about 1580, and that's these lows right in here. But when we look at the 1600 mark, and that's right here, you can really see that we have the majority of the trading range. In other words, where these bodies are right within there on the bottom, in terms of the top, about 1620, right in that area. And so when we look at the defined trading range itself, we can really pick out a range that's still pretty narrow, but is anywhere from about 1600, call it 1598 on the low side. And then on the high side, what we're getting is just about 1620, 1621, which happens to be the high of the day. So as you can see, we do have this really narrow trading range, as I said, that really doesn't incorporate an entirely large range itself. When we take a look at it in this way, as I said, about 1600 to about 1630, you can see that once we do that and isolate that, you can see that the majority of the trading range is really happening right within that area. And so what I would recommend for those traders kind of itchy or looking to get into the market, you can either put in price orders, or as you're watching the market, as it goes to the lows of a trading range day, if it's around 1600, 1598 in that area, you can look to buy it in that area, but you also want to look to cover anywhere between, say, 1615 and 1621. The nice upside moves that we have witnessed today in the precious metals markets have been largely due to dollar weakness. As you can see, this is a daily chart, Henkin Ashi format. We're going to convert it into a candlestick because you really can't see the kind of down move we had. What you can see when we look at the Henkin Ashi, for example, is if we take this closing price 82.41 and kind of draw it over, you can see that it's near the lows of this particular trading range itself. I have identified a modified Andrews pitchfork, and the reason for using this Andrews pitchfork is what we have really noticed is this channel trading. As this market broke to the upside, of course, this again is the dollar index. We hit our high. You could predict the high by pegging these 2 points here. You can see that right here. And then since then, it's kind of traded right within this channel. I think we're going to head back down to this channel and probably then move back up. If the dollar stays strong, it should continue to trade in this mode. What you want to do, of course, is watch to see at these particular pivot points, for example, right in here, whether or not the market breaks and then moves down to the lower channel, or if you get a break and maybe even possibly a newer higher channel. That's really the way that I have been utilizing this particular chart. Traders, really interesting activity so far in silver. Let me move it down first and then we'll blow it back up. And as you can see, I've tried to identify a couple of different support and resistance areas as we've traded within this range. And as you can quite easily see, we've created these from two Fibonacci retracement points in here and in here. And that's what's given us these two levels of 23% on both of them. One at 27.01, one at 28.06. So 27 to 28, we've had the market really trading within this defined range. And when it hits these different areas, as you can see right in here, you've got primarily most of the bodies right in there. Market moves up, hits that top. But right in this area, you can see that just as when it hit support, it kind of meandered or skirted right along that line. We're getting the same kind of activity now in silver. Today, though, was a little bit different because it has broken well above that line. Now, the question remains, and this is what we'll see over the next few days is, and let me go ahead and blow that up. You can see that we're now at a small, on an intraday, this is a 420, but really you can see a series of tops. One top here, top here, top here. And again, we've gone over this basic area of resistance, and now the question is it going to then, as it has in the past, come up, fail, and then meander back down towards this bottom and hit support again? Or will we truly get some sort of a breakout to the upside? I can only say that historically speaking, on the last three attempts, 1, 2, and 3, it was able to take out and go to resistance right in here, 28.40, but not take it out. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up on Friday. Bye-bye.